Testing one, two, three. Testing one, two, three. All right, so I wanted to talk a little bit about this short term trading forecast. I posted it for the first time yesterday, and I wanted to tell you a little bit about what it does. I didn't have a chance to do it yesterday, but I did want to get it up on the site. And speaking of the site, it's a kind of a work in progress at the moment. You can see on the home page, I'm working on the themes and colors, but first off, my name is Dave Johnson. I've been a system designer, trader. I've traded S&P, NASDAQ futures since the day they started, when they went electronic. So I've been trading intraday for a long time. I design trading systems that try to have high risk-adjusted returns. I try to build a portfolio of systems that create very high risk-adjusted returns, relative to their volatility, the returns to the volatility. And so I created this website, Trading Time Machine, tradingtimemachine.com. This goes back to the concept of we're doing a lot of back testing, so we're using back data. We're going back in time. We go into the time machine, and from that we can extrapolate some forecasts. And that's what this is, this trading forecast. So you can hit it from the homepage for now. There's your free daily forecast. The other thing on here is the View the SPY system. So very shortly I'm going to be I have a system that trades the SPY, which is the S&P 500 tracking ETF, that is really good. In my own portfolio, and I have other people that have paid for the ability to access the system, trade that for many years. This is a slight variation of that makes it a little easier for one time a day signals. And so it's actually a combination of two systems. It's kind of got a mean reversion element and another portion that's called trend, but it's actually taking advantage of a lot of overnight risk premium. So you get a lot of enter during the day and exit the next morning. Okay, anyway, so back to the free. And so that free system, that's coming soon. I'm getting that prepared, the wording on it and such. And I'm going to have a thing where you could subscribe monthly. You could pay 3 months or you could pay yearly. Just something simple. But this system is not your average SPY system or your average system in general. This is something that has, over the 32 years of the SPY, it's got a Sharpe ratio of over 1.85. It's actually 1.9. That's extremely unusual, extremely rare. I don't know of another system that does that. And just to kind of, we're going to do a whole thing on Sharpe ratio, risk-adjusted returns, and why you would want to have those. But for now, let's just say that you take your annualized return, you're dividing that essentially by the amount of volatility you have in your system, and that gives you a Sharpe ratio. So it's very rare for somebody to have a Sharpe ratio that is below, a Sharpe ratio that's above 1. Very rare, but we'll get into that. All right, so let's go into this trading forecast. Yesterday the forecast was very negative. I had tweeted out, here we are. This was the 1 and 2 day. So the 1 was in the red. For now, I'm probably going to tweak this gauge a little bit, but let it be known that when you're red on a 1 to 2 day time frame, and as you can see on the website, we're looking at 1, 2, 3. I do a 5 day and I do a 10-day return. So yesterday was unusually rare to be in the red for 1 and 2 day return. So I noted that. And so what does this mean exactly? So it means that the regime that we're in, let's say currently we're kind of in a lower VIX bullish environment, kind of standard. Returns tend to be a little bit smaller day to day. This is smaller even more so, and it actually was negative. So it's pretty rare, and it's something just to keep an eye out on. If you're a swing trader, your best bet is to keep an eye on these 3, 5, and 10-day returns. We'll get those as we get oversold in certain conditions, and you'll see these gauges go up to green. And they're a great time to put on exposure, whether you're looking at your favorite tech stock, any S&P 500 stock. But you're going to have correlation to the S&P 500, and that's why we do this. This is actually part of an input into some systems that are actually real systems that are traded. I run an automated portfolio. I use a Wealth Lab typically for doing their research, building the systems. We use AmbiBroker as well. So yeah, so I added in this little chart here so we can see that intraday. What do we got? So we basically this one day was predicting for the next day's open. So it doesn't take into account this gap. So last night, I'm saying the return for the next day was going to be quite weak. But that's from the open. So you need to keep that in mind that this is from the open, and it's actually to the next open. But it's trying to pass along to you that there is some potential risk. That being said, it's a probability thing. So you need to understand that there were probably 30 days that matched this particular algo. It's a algo matching. It's a matching algo design. So it's trying to find days that have similar setup. And so in this particular one, it was negative, but there were positive days. So you need to understand that maybe there was 50% of the days were winners, 50% of the days were losers, but the average winner was larger than the average loser. So it's got a skew to the negative. So just keep an eye on the gauges, bookmark the page, check in each day. I haven't put any advertising or anything on the page, so it should load pretty quick for you. And just check it. I'll try to get it. I run the signals for other people and clients that I have. I typically have it done by 8 p.m., but at the very least, check it in the morning, and you can check on the date right here. So you can see I did tonight's scan, Tuesday, 9/30/2025. We're like right at 0. 3 day, we're in the yellow. So look for these things where it goes red, green. This is pretty normal kind of day for tomorrow. And so a way this can be used, so I trade the S&P futures during the day. I just pulled up the SPY here in the queue, and this is actually kind of what you want the bias of those gauges. 1 day bias was very negative for today. And now you want to see the chart kind of expressing that. And so we have the gap up in the morning, chop, 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 chop. And then the first time we put that lower high, kind of run into the 20 period moving average. Here was another shot. I actually shorted here, and I shorted right here on that reversal right here. Then things kind of go midday. We saw it again in the afternoon, but it was running quite slow, and the range was slow, so I don't think I got that one. And I did get a little piece of this. But the point being, this is what you want to trade if you're getting that, if you're going to pay attention to the bias at all. The 1 and 2 day might have quite a bit of weight on the intraday movements. That's it, I think. Yeah. Keep an eye on my Twitter page. It's @TheTrading on X or Twitter, whatever they call it. You'll see the Trading Time Machine, which is the website, but my @TheTrading is my moniker on X. If anybody has any questions, you can always email me or direct message me on Twitter or email me at dave@tradingtimemachine.com. All right, thanks a lot, guys. And again, best of luck trading, and keep an eye on the gauges. All right, bye.